Garage Gang, it's Black Friday, and your boy Avatar John is back in the Bay. I hope you're ready, because tonight's tape wasn't just spicy when it was cooked in jet fuel. Tonight, in the garage, a market that shouldn't be alive just sat up straight. Gold didn't just break a record. It broke the damn sound barrier. The Fed didn't pivot. They surrendered. The CME, the heart of TradFi, flatlined on Black Friday while Bitcoin kept beating like a war drum. And AI didn't advance today. It evolved. DeepSeek is solving mathematics like it's decoding the universe. Gemini 3 is thinking in 4 dimensions. And GPT 5.1 is out here rewriting the rules of intelligence like reality is patch notes waiting to be updated. And before we dive into the heat, understand one thing. XXX has been on absolute fire. I'm talking back-to-back heaters, chart assassinations, laser-focused execution, no hesitation, no fear. He hasn't missed a candle in days, and we'll get to his carnage at the end of the show. So do the garage a favor, smash that like, hit that follow, and share this with your fellow crypto bros or that guy at work who still wears the Shiba Inu to the moon shirt and thinks he's retiring off a $50 bag. All right, buckle in, because now we drop into gear one. And gear one is not gentle. All right, let's break this wide open, because today the truth slipped through the cracks. The Federal Reserve, the so-called adult in the room, tapped out. They didn't pivot. They didn't adjust their stance. They stopped QT early, which is the financial equivalent of throwing your hands up and saying, we can't keep this up. Something's about to break. Now, I know you hear these suits on CNBC or Bloomberg tossing the acronym QT around like a magic spell. So let's make it simple so anyone in the garage can get it instantly. QT, quantitative tightening, is just a fancy way of saying the Fed is sucking money out of the system. Imagine draining oil out of a running engine. A little, the engine runs hotter. Too much, it seizes. QT drains liquidity from the banks, from markets, from everything. It takes fuel out of the machine. It's how they pretend to fight inflation. So when the Fed suddenly says, okay, we're done with QT early, that is not confidence. That is not control. That is fear. It means reserves were getting too low. Banks were getting too tight. Something underneath the hood was grinding, overheating, flashing warnings the public never sees. And the second that announcement dropped, gold didn't rise. It launched through $4,200 like it was escaping Earth's gravity. Because gold is the market's lie detector. And gold is screaming, we see the debasement coming. We see the panic. But now comes the part most people would never connect, and the part nobody in the mainstream will ever explain. While the Fed was tapping out, the CME was falling apart. So what is the CME? Let me break it down so anyone, whether you're a coder, a mechanic, or a dude who just found this channel by accident, will understand. The CME is the price engine of the world. It's where the S&P gets priced, oil gets priced, gold gets priced, interest rates get priced, volatility gets priced, hedges get placed, risk is managed, and the big money protects itself. If the Fed is the brain, the CME is the central nervous system. It tells the world what things are worth. If your car's ECU, the computer controlling the whole engine, suddenly shut off at 90 miles an hour, that's exactly what the CME outage was. Black Friday, the whole world awake, and the CME goes dark for nearly 10 hours. No futures, no hedging, no rebalancing, no fair value, nothing. Institutions were driving blind at highway speeds. One bad headline during that window could have taken the entire system down a notch. And the wildest part, crypto, the thing they call risky and unstable, never went down, not once. Bitcoin kept printing blocks. Solana kept pushing transactions. DeFi stayed open like it was a normal Tuesday. The old rails glitched. The new rails flexed. So what does this all mean? It means the Federal Reserve is nervous about liquidity. It means the financial engine is fragile. It means the old system coughed, choked, and flashed warning lights. I mean, the new system didn't blink. This wasn't just a market day. This wasn't volatility. This wasn't noise. This was a transfer of power. And if you're in the garage, you saw it first. Gear two. Now that we've ripped the hood off the Fed and watched the CME cough smoke, let's talk about the signals hiding underneath the chaos. The stuff nobody sees unless they live in the trenches like we do. Because today wasn't just about what happened. It was about why it happened and what the smart money did while everyone else was panicking. Here's the first hidden signal. When the Fed tapped out and killed QT, Bitcoin didn't moon. But whales started buying like they already knew the next chapter of the story. 186% increase in whale holdings in a single month. That's not normal behavior. That's not random behavior. That's strategic accumulation. Whales don't chase pumps. Whales don't play lotto tickets. Whales buy when the system shows weakness. And boy, did it show weakness today, while retail was screaming on Twitter, selling bags at the bottom, throwing tantrums about candles. The predators were loading up. That's your first signal. Smart money always moves before the headlines make sense. Next signal, gold and Bitcoin move for the same reason. Fear of fiat decay. This is the part people miss. Gold exploding and Bitcoin holding steady in a storm isn't a coincidence. It's the market saying, we want assets they can't print and systems they can't pause. You want another signal? Look at volatility. Equity volatility was dead today, flatlined like nothing was happening. But bond volatility, it was screaming. Bonds were flashing red while stocks pretended everything was fine. That gap, that divergence, that is what smart traders use as a compass. It means stocks are living in a fantasy while bonds are telling the truth. Next hidden signal. Stablecoins quietly moved. Not headlines, not influencers, not hype. Just raw capital shifting behind the scenes. Money left Ethereum mainnet and started flowing into layer 2s like Base and Arbitrum, the places where transactions are cheap, fast, and institutional friendly. You don't move stablecoins unless you're preparing for action. Capital is repositioning, scouting, rearming. Another signal. The system broke and AI didn't blink. The CME died. The Fed tapped out. But AI kept firing new models like Artillery, DeepSeek, Gemini 3, GPT 5.1, Claude 4.5, one after another, like a technological tidal wave nobody can outrun. When markets get shaky, innovation normally slows down. But today, innovation accelerated. That means capital doesn't want safety, it wants opportunity. And the final hidden signal, the one almost nobody catches, crypto didn't take the bait. It didn't panic. It didn't overreact. It didn't do the classic big headline, big dump routine. Instead, Bitcoin held 91. Solana stayed strong. XRP sat on a supply shock like a pressure cooker. The whole asset class acted like it was waiting for the exact moment the world realizes how weak the old machine is. That's the real signal. Crypto is behaving like a maturing asset class, right as TradFi is showing cracks. This is not random. This is not temporary. This is not luck. This is positioning. This is consolidation. This is the market inhaling before it screams. Gear 2 is simple. The smart money already knows where we're going. The charts don't lie. The flows don't lie. The behavior doesn't lie. The only question left is whether the public wakes up in time or whether they keep staring at headlines while the next wave of wealth gets positioned without them. Gear 3. And now we are stepping into the part of the show that most people aren't ready for. This isn't charts. This isn't headlines. This is the shockwave that's going to hit humanity, whether we pay attention or not. Let's talk about DeepSeek. Because DeepSeek isn't just another model. DeepSeek is the moment the world changed. This thing didn't just pass a math exam. It obliterated one of the hardest mathematical challenges on the planet. We're talking Olympiad-level proofs, the kind humans spend years training for. DeepSeek walked in cold and practically perfect scored it. 118 out of 120 on a test most genius-tier humans can't even finish. That alone would be terrifying. But the real danger? DeepSeek's entire architecture is open source. Anyone can download it. Anyone can run it. Anyone can weaponize it. This is intelligence you used to need a PhD and a decade of research to earn, now sitting on GitHub like a cheat code for the universe. And when you give that kind of intelligence to the entire planet at once, you don't just accelerate progress, you destabilize the old order. The kids, the criminals, the creators, the corporations, they all have equal access now. There's no gatekeeping, no permission, no filter. DeepSeek is basically giving the world a super weapon and saying, don't do anything stupid. And the world is full of stupid people. But here's where it gets even more serious. DeepSeek isn't alone. Gemini 3 dropped like it had something to prove. Not just thinking, seeing, understanding the physical world, predicting cause and effect. That's spatial reasoning. The moment an AI truly understands space, movement, geometry, physics, it stops being software and starts being a synthetic operator. Drones, robots, warehouses, factories, construction sites, traffic systems, emergency response, military applications. Everything physical becomes programmable. Everything human becomes replaceable. GPT 5.1 came in with raw strategic thinking. It plans like a general. It reasons like an economist. It predicts like a quant. This is no longer a chatbot. This is a commander-level intelligence you can run from your laptop. Claude 4.5 rolled in as the legal assassin. Contracts, regulations, compliance, policy, analysis. It processes thousands of pages like humans read sentences. Entire legal departments are about to be compressed into a single prompt. Then Grok 3 emerged. The coder killer. Faster than senior engineers. Better than entire dev teams. Writes, fixes, and optimizes code without emotion, ego, or error. You give Grok 3 a problem, and it writes the solution before a human can even understand the question. Now ask yourself, what happens when all of these models accelerate at the same time? DeepSeek gives you superhuman math. Gemini gives you spatial intelligence. GPT 5.1 gives you high-level strategy. Claude gives you legal and corporate dominance. Grok gives you engineering at superhuman speed. Put them together, you don't get a tool. You get a new class of intelligence, a force multiplier, a system that can think, plan, calculate, analyze, design, execute, operate, iterate, and improve itself faster than humanity can blink. This is the part nobody's ready for. Not governments, not companies, not regulators, not the public. And here's the ball kick truth. This isn't coming in 10 years. It's happening now. This is why we bring this level of heat every night in the garage, because most people think AI is still that thing that writes essays. Meanwhile, these models are solving elite level mathematics, planning multi-step campaigns, running robotics, writing code, decoding law, and simulating physics like a new form of intelligence just spawned inside the internet. The world is shifting to machine speed, machine capability, machine intelligence. And if you understand what's happening, you're early. If you don't, you're a spectator in a game you didn't even know you were losing. This is real. This is now. And this is why only the garage gives it to you this raw, because anything less wouldn't prepare you for what's coming. Gear 4. And now we get into the part that actually moves money, because while everyone else was panicking, complaining, coping, and refreshing charts like gamblers, the real story was happening under the surface. Let's start with Bitcoin, because Bitcoin didn't pump today. Bitcoin didn't moon. It didn't collapse. It didn't celebrate. It didn't panic. Bitcoin tightened. That's what people don't understand. Bitcoin doesn't shout when it's about to do something big. It goes silent. It coils. It compresses. And right now, Bitcoin is sitting at 91 like a loaded crossbow, calm but lethal. Because while retail was screaming, whales were buying. Not a little, not casually, not some soft trickle. 186% increase in whale holdings in a month. That's not bullish. That's not hype. That's predatory behavior. Whales don't buy bottoms. They take them. They watch the Fed tap out. They saw the liquidity return. They smelled weakness in TradFi, and they said, load the bags quietly. Bitcoin didn't dip. It transferred ownership from the emotional to the strategic, from the loud to the patient, from the public to the predators. And then there's XRP. XRP isn't just tightening. XRP is undergoing one of the nastiest supply squeezes I've ever seen. 300 million tokens drained from exchanges in weeks. ETFs absorbing 20 to 30 million tokens a day. Exchange reserves dropping to yearly lows, and price barely moved. Do you know how insane that is? Imagine the entire world is quietly stocking ammo, and nobody's looking at the shelves. XRP is sitting under a pressure dome so tight, the second the narrative catches up to the math, it won't rise, it will jump. You don't get this set up twice in a lifetime. Now let's talk stablecoins, because capital doesn't lie. Capital doesn't joke. Capital doesn't troll on Twitter. Capital moves with precision. Stablecoins left Ethereum mainnet and migrated to cheaper, faster, more scalable rails. Solana, Base, Arbitrum. That's not people running away. That's people lining up, repositioning, scouting, getting into new trenches before the shooting starts. And then the final signal, the most important one. Crypto didn't break today. Crypto didn't flinch when the CME went down. Crypto didn't freeze. Crypto didn't panic. Bitcoin kept producing blocks. Solana kept processing transactions. DeFi kept trading. The decentralized world turned to the centralized world and said, you good? No? Okay, we'll keep going. This is the first time in history where traditional finance lost consciousness and crypto stayed awake. That's why this matters. That's why we're here. That's why Gear 4 hits harder than anything else. Because crypto isn't reacting to the world anymore. Crypto is replacing the world. Whales know it. The Fed knows it. AI will depend on it. And everyone watching this right now, you're early enough to understand it, early enough to act, early enough to win. While the rest of the market sleeps, the garage sees the setups forming, Bitcoin tightening like a spring, XRP starving the exchanges, Solana getting ready for another vertical, Base capturing institutional flows, AI tokens waking up with vengeance, stablecoins repositioning for battle, whales holding, retail confused, narratives lagging behind fundamentals. Everything is pointing in one direction. We are not in the end of a cycle. We are in the middle of a reload, and the next leg won't wait for anybody. This was Gear 4. And if you think this was heavy, just wait until we drop the closeout, because that's where the real fire starts. Gear 5. And now we shift from what happened to what's coming next. This is where the story turns into a battlefield. Because after a day like today, the market isn't random. It's not drifting. It's not choppy. It's setting up. You can feel it, like the air pressure dropping before a storm. Let me show you the pressure points. Bitcoin is sitting in a coil tighter than a torque wrench. The liquidity is drying up on the sell side. Whales have finished loading. Funding flipped negative. Open interest got flushed. And now it's just sitting, still, quiet, too quiet. When Bitcoin gets quiet, it doesn't die. It hunts. Above 96,000, you get a squeeze. Below 89, you get a scare. But right here where we are, this is the kill zone where whales like to push the button. Then there's Ethereum, the quiet middle child. Everyone keeps forgetting it, but BlackRock didn't forget. Wall Street didn't forget. AI companies aren't forgetting. ETH isn't weak. It's patient. Whenever Bitcoin pauses, ETH steals oxygen. We're seeing it warm up again. And then there's Solana, probably the most important chart in the market. SOL didn't break during the volatility. It didn't puke. It didn't roll over. It held strength like someone was defending it with purpose. That's not random. That's positioning. That's someone who knows something. If Bitcoin is the engine, Solana is becoming the transmission, the thing that actually puts power to the wheels of this cycle. Now XRP, this one is a volcano pretending to be a rock. The supply shock is absurd. Exchange reserves collapsing, ETFs absorbing supply faster than exchanges can refill, and price hasn't caught up. This is the kind of setup that goes sideways, 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 then disappears in one candle and never looks back. Next, AI tokens. The world just watched frontier models level up 3 full tiers in 12 hours. AI innovation is outrunning human comprehension. That's not bullish, that's tectonic. Tokens like TAO, FET, RNDR, HYPE, they're not just narratives. They're becoming infrastructure plays. Robots, agents, autonomous systems, they all need compute. They all need settlement. They all need decentralized rails. AI isn't just adjacent to crypto. AI is about to run on crypto. The market hasn't priced that in. Not even close. Now look at stable coins. They're moving like scouts before an attack. Quiet, strategic, purposeful, leaving expensive rails and migrating to fast chains like Solana and Base. Capital is positioning ahead of time. Capital is sniffing opportunity. And DeFi, everyone said it died. Everyone said TVL dropping meant panic. No, TVL dropped because prices dropped, not because users left. Volume stayed high. Usage stayed high. Builders stayed building. That's not collapse. That's compression. All of this, the coiling, the migration, the tightening, the quiet accumulation, it paints one clear picture. This market is not exhausted. It's reloading. This is the phase where smart money gets in, where retail gets confused, where the charts stop making sense to the casual observer because the casual observer doesn't understand pressure. You don't hear the pop until the balloon bursts. You don't feel the earthquake until the plates slip. You don't see the rocket until it leaves the frame. Right now, the whole market is pressure, quiet pressure, coiled pressure, suffocating pressure. And the moment that pressure releases, it won't be polite. It won't be gentle. It won't wait for confirmation. It will just go. Gear 5 is simple. The setups are forming. The battlefield is drawn. And only the people paying attention to signals, not noise, are going to be ready when this thing moves. And trust me, it's going to move. Guru, say next. And we move into Gear 6. The XXX story, the Vegas hunt, and the Solana trench picks delivered like the cinematic finale. Gear 6. And now we get to the man of the hour, the one they whisper about, the one the trenches swear by, the one the Solana underworld calls when the candles go quiet, XXX, while everyone else was stuffing their faces with leftovers or pushing shopping carts around Best Buy, and he wasn't at home. He wasn't relaxing. He wasn't with family. He was in Vegas, not on the casino floor. That's where amateurs lose paychecks. He was above it, up in those dark red lounges where the carpet is too thick. And the air smells like expensive trouble. A quiet room, dim lights, 3 screens glowing like altars, Dex screener on one side, Solana wallets on the other, Axiom humming dead center like a heartbeat monitor. He didn't bring bags. He didn't bring emotion. He didn't bring dreams. He brought 50S all. That's the rule. That's the discipline. That's all he needs to go hunting. He sat down, cracked his knuckles, let the room go silent, and started scanning the underbelly of Solana. The part most traders are too scared to look at. He wasn't looking for fresh garbage. He wasn't looking for hype. He wasn't looking for whatever Twitter was screaming about. He was looking for survivors, premium zombies, tokens that got punched in the mouth, buried alive, clawed their way out, and still had liquidity, still had volume, still had believers. He spotted the first one, a meme jet with volume way too high for its age, not a rug, not a pump, a survivor. Second one, an AI narrative coin waking up from weeks of silence. Wallet stirring, makers creeping in like shadows. Third one, a nostalgia meme with a cult following, ridiculous name, ridiculous chart, ridiculous potential. He tested entries, little sniper shots, no aping, no chasing, in on momentum, out before greed, wave after wave, precision entries, surgical exits. You could practically hear the Sol stacking, 50 Sol, 55, 60, 68, 72, 75. And when the room dimmed even more and the screens began to reflect off his glasses, he did what XXX always does. He shut it off, closed the wallet, ended the hunt, walked away with clean profit, no bragging, no screenshots, no ego, just discipline. He ordered a ribeye, a lobster tail, a whiskey that cost more than some people's bags, ate like a man who earned every bite, went back upstairs and set his alarm for the gym. That's XXX, the man who doesn't chase candles. The man who doesn't swing for home runs, the man who plays the market like a blade, silent, sharp, efficient. And that's why you're here. That's why you watch this show. Because while the world is gambling, the garage has killers. While the market is coping, the garage is reading signals. While retail is tweeting memes, the garage is stacking alpha. This is the level. This is the standard. This is the garage. And tonight, XXX just reminded the entire market what discipline looks like. All right, Garage Gang, before we wrap up tonight, let me walk you through what Lulu's seeing on the charts. I'll keep it simple, clean, and easy, so anybody watching, whether you trade full-time or you just pretend to, can follow along. Let's start with Bitcoin. BTC is doing that classic quiet predator thing. It's not dumping, it's not ripping, it's just coiling. On the small time frames, we've got higher lows. On the bigger time frames, we've got compression. And when Bitcoin compresses, it's usually getting ready to choose violence. If Bitcoin pushes above 90,900, we get a run back into 91.5 and maybe even a shot at 92. If it slips under 90,500, we're right back to tapping that 90 flat area, maybe even 89.8 if it wants to scare people. Right now, it's holding steady, but one spark will send it either direction fast. Ethereum looks cleaner. Every time it dips into that 3028 to 3032 zone, buyers show up. You can literally see them stepping in on every candle. ETH wants higher. It just needs Bitcoin to stop acting weird. If ETH holds above 3028, it can easily push back toward 3050 and above. If it loses 3020, we slow bleed back toward 3K even. Solana. Oh man, SOL is still the athlete of this market. You can see it on the 1 minute, the 3 minute, the 15 minute. It dips and immediately someone punches the buy button. Higher highs, strong recoveries, and good momentum. If Sol stays above 137 flat, she'll try for 138.20 and maybe 139. But if she loses 136.60, we drift back to 135.90 before the buyers come back. It's still the strongest of the big caps. And then there's ADA. Look, 80 is trying. It really is. But the chart's tired, lower highs, slow fade, every bounce gets rejected. It's not dead. It's just not leading. If ADA can reclaim 4170, it can breathe again and maybe push to 4190. If it breaks 4155, we revisit the lows. Simple. And for anyone new in here, this is the important part. None of this is financial advice because Lulu is a pig. She has hooves. She sleeps in hay. She eats carrots like they're pre-workout gummies. We do not take financial advice from livestock, but she is weirdly good at charts. Last thing before we sign off, check out the website, gurucryptogarage.guru. It's free, it's clean, it's updated constantly, and it's built for everyone who rolls with the garage. All right, gang, enjoy the weekend, rest up, hydrate. We'll see you Monday. Engines hot, safety off,